The NASDAQ is like a big marketplace where people can buy and sell things called stocks. But instead of buying clothes or toys, they are buying parts of different companies. It's a bit like owning a tiny piece of a big pizza. The NASDAQ started a long time ago, when people wanted a way to trade stocks faster and more easily. It officially opened in 1971, and it was a big deal because it was the first stock exchange to use computers. This made buying and selling stocks faster because people didn't have to physically be in one place to make a trade. The NASDAQ is different from another stock exchange called the New York Stock Exchange. The New York Stock Exchange is like the fancy restaurant of stock trading, where big companies usually go. The NASDAQ is like the cool tech startup of stock trading, where lots of technology and internet companies are listed. Over the years, the NASDAQ became famous for hosting some of the biggest and most successful technology companies in the world. Do you know some of these companies? Well, big names like Apple, Microsoft, Amazon, and Google are all listed on the NASDAQ. But it wasn't always smooth sailing for the NASDAQ. In the early 2000s, there was a huge problem called the dot-com bubble. Lots of technology companies were getting really expensive, and people were buying their stocks like crazy. But then, the bubble burst, and the prices of these companies' stocks crashed. A lot of people lost a ton of money, but the NASDAQ recovered from that setback and continued to grow. Today, it's one of the largest stock exchanges in the world. Every day, millions of people buy and sell stocks on the NASDAQ, hoping to make money or invest in companies they believe in. To keep everything fair and safe, the NASDAQ has rules and regulations. Companies that want to be listed on the NASDAQ have to meet certain requirements, like having a certain number of shares available to the public. This way, people can trust that the companies listed on the NASDAQ are legitimate and reliable. Another interesting thing about the NASDAQ is that it doesn't have a physical trading floor like the New York Stock Exchange. Instead, it all happens electronically. You can imagine it like a giant computer, where people from all over the world can buy and sell stocks with just a few clicks. Sometimes, the NASDAQ goes up, and sometimes it goes down. This is because the prices of stocks are always changing based on how well the companies are doing. When people think a company will do really well, they want to buy its stock, and the price goes up. But if they think a company is not doing so well, they might sell their stock, causing the price to go down. One way people keep track of how the market is doing is by looking at something called the NASDAQ Composite Index. It's like a big scoreboard that measures how well all the companies listed on the NASDAQ are doing as a group. When the number goes up, it means the stock market is doing well, and when it goes down, it means the stock market is not doing so well. So, in simple terms, the NASDAQ is a place where people trade stocks of different companies. It started in 1971 and became famous for hosting big tech companies. It had some troubles in the past but has grown to be one of the largest stock exchanges in the world. And now, every day, millions of people buy and sell stocks on the NASDAQ, hoping to make money and invest in companies they believe in.